The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. My name is Darrell Martin. I'm the host of the show here, and I am glad to have you here on TFNN. Make sure you check us out online at TFNN.com or on your mobile phone anywhere for 9 hours of live trader commentary each and every day at TFNN.mobi. Let's check out where the markets are at right now. We got the indices running on up. S&P is currently up 11.5 points. Russell's up 12.8. Nasdaq's up 38 with the Dow up 95 points. We have copper right now. It is flat on the day. We got gold is currently down 12 points right now. Silver is down about 2% on the day. Gold down about 1% on the day. Natural gas down a little over 1%. Oil running on up $1.28, 1.3% right now. We got corn moving up 6 points. That's 1.25%. We got soybeans running up 22 points, 1.6% move right there on soybeans. Euro dollar is currently down about 9 pips. Aussie dollar is up 35. We got the pound dollar down 63. The dollar franc up 10. Dollar CAD is up 32. Dollar yen is currently down 34 pips. Aussie yen is flat on the day. Let's see here. We got euro yen is down 55 pips. The pound yen is down $1.26, and euro pound is up 24 pips on the dollar. So that catches us up on where we're at the moment. Now, one thing we need to do, because I haven't got a chance to do it with you, I was out. Me and my wife celebrated our 10-year wedding anniversary this past weekend, and it was awesome. So I'll have to get some pictures up here. I can show what we did, but it was pretty cool. I totally surprised her. She had no idea what was going on. I told her I was gonna. I told her we'd go out to a gun range, and this is our 10-year anniversary. And because she's been having trouble learning how to shoot her pistol, she doesn't like it, and I went and I got a new pistol for her. And I'm like, yeah, we're gonna go out, and I know these guys. They're military guys like SEALs, and they're all like special ops, and. So I was like, yeah, they're going to come out, they're going to teach us how to shoot. It's actually really fun. So like 600 rounds, and you go out to this like remote shooting range, and you learn how to draw, how to like unload, reload, all this stuff. And she's like, wow, that sort of sounds like fun. And she's like, but are we going to get to spend just some time together doing something? I'm like, oh yeah, we'll do something. Yeah, don't worry about that. This is just, I know you like to do fun, different things. And so she has no idea what's going to happen. And so I'm like, yeah, okay, we need to be back at the house at this time so we can get checked in. And she's like, checked in? Oh, where are we checking in at? And this is Friday. And I'm like, okay, you have to be back because we got a hotel. She's like, oh, okay, well, that's good. So she's like, okay, well, I guess he's at least got a hotel. And I told her, she's like, where's it at? I'm like, it's in Dallas. She's like, oh, I bet I got a nice one. And she doesn't care. Literally, I could, as long as we just went out camping, she'd be fine or whatever. Stay home with no kids, she'd be happy. But so anyways, I got the kids off to my mom's house, and I was like, yeah, well, we have to go run some errands now. And so I went out and actually took her to buy a dress. So she's like, wow, okay, this is going to be bigger than I thought. And so we went and we got her a dress, and then so we head over to this hotel. She has no idea where it is. We're going into downtown Dallas, and which they've redone a lot. It's really nice. And we're driving by, and she goes, oh, look at those little bitty, bed and breakfast hotels. Like, she was surprised they were in downtown Dallas. I was like, yeah, look at those. And then I pulled her right into one of them. She had no idea that I had booked there. This little chateau there has like 6 rooms only, like 6 suites in the entire hotel. You have your own butlers and everything, and there's it's candlelit everywhere. It's over 100-year-old hotel, and so just a really, really beautiful place. So that's where we're staying. And so it's like, well, now we got to get dressed because our ride's waiting. And she's like, our ride, okay. So she gets dressed, gets ready. We go outside, and I booked a carriage. It was a Cinderella carriage. And so as soon as we walk outside, her eyes just explode. She can't believe it. So, but there's a Cinderella carriage awaiting us, and it takes us to our restaurant. We go over. We're eating at Reunion Tower, the new Wolfgang Puck restaurant, 560, which is really, really nice. And but about a 45-minute ride to get over there. So we had I bet we're on a lot of people's Facebook pages. We were getting pictures everywhere. She was all dolled up and everything, and in the Cinderella carriage, and did that for the night. And Anyway, so then Wemo came back, and we walked around and went to some of the little shopping areas in Dallas, and then the next day she was in a very good mood, good spirit to go gun range shooting. But it was a lot of fun. She had no idea. She just thought it was all about guns, and so. But she had a lot of fun, and she's actually a pretty good shoot now, which is a little bit scary. It's like one of those like cool things to teach her, but a little bit scary at the same time. But anyway, so that's where I've been the last couple days, and I got a little bit sick yesterday. I ate something weird, so I was out for yesterday, but I'm back on track, and what we got to catch you up on is the news, okay? Because I haven't really got you ready to go for this week for news. And so pulling that up on Forex Factory. Oh, also I got our little 10 sapphire diamond ring for a 10-year anniversary. So started it off with that won some points. But let's check out what news is going on, what we can take advantage of this week, and keep it going. So the problem is I got to figure out what I'm going to do next time, right? You do too good, then you're like, how do I top that? But let's see here. Going on to, all right. So today we had a few reports come out. Let me see if any of those they were not a high impact scheduled news. So the good news is the only thing we really had on today that would have even possibly registered with the core CPI on today's news report. And looking over at today's news report, let's see, core CPI, the only one, I did mention this one last week. 79% of the time it breaks 50 pips, average of 60 pips on the euro dollar. But I didn't really dive into the report in detail for you. And so we can look at that. We've also had a couple governors coming out, the Canada governor coming out and speaking. So it came out at 11:55 with the text released at 11:40. And then we also had Governor Carney out of Britain speaking 1:45 today. So he'll be speaking at the annual MICE lecture in London. So both of those can have impacts, of course. And then we had the long-term purchases from the treasuries get released today. And then the release time was actually supposed to be yesterday. It got shifted to today. Okay. So and the long-term purchases were only $7.3 billion on an expectation of $23.4 billion. So what that does is difference between the value between foreign long-term security purchased by U.S. citizens and U.S. long-term securities purchased by foreign citizens. So basically, how much are they buying of ours versus how much are we buying of theirs? And usually expecting ours to be higher. Okay, so now moving on, looking at the core CPI. I guess that's the one. Like I said, the one major trade we can check out today. And let me get that opened on up for you. And we'll look over at the euro dollar on that one. Let's get a basic chart up on it. And then we'll go through and we'll look at what is coming up this week to make sure you are caught up and ready to go for the rest of the week on the news. Give me 1 second here. Chart's taking just a little bit longer than I like. Okay, there we go. File, new chart. Okay, so we'll check out, just like I said, the euro dollar. The first one we'll pay attention to right now. And look at that for the moment. So what kind of move did we get on it? And here we go. All right, so the report was released today at 8:30, and it came in at expectations, like exactly at expectations. Usually we want some kind of divergence in the number to really, get the big moves. But let's see what kind of move did we get for our 2-hour post-release. 8:30, 9:30, 10:30, so about right here. Yeah, we got about 34 pips. So not really a big surprise, being on par. There's no fundamental shock when the number comes in at expectations. So probably could have got in. If you did hop in that trade, that wasn't, I really didn't, run through the report. If you got into it when it came out at expectations and pretty much where it expired at, probably somewhere close to break even on the trade, small loss, small profit, you definitely had time to get out of the trade because it took forever to go anywhere. But anyways, let's look at what else we have that we can actually take advantage of this week, because there's not a whole lot going on right there. I want to look in here and see what we got. We got the UK MPC meeting minutes are going to be coming up, so let's check those out. That along with the FOMC interest rate happening tomorrow as well. Okay, so these two things combined ought to give us maybe a trade or two. I'll probably talk about the FOMC a lot more in detail tomorrow on the news show, so make sure you turn in for that right here on Diagnostic Trading Hour. But let's look at what we got for the upcoming meeting minutes to see if we can possibly get some. I'm just going to try to see if there's really any good data on it. Let's see here. Got March, and I'm looking over at, we have the bank rate votes, the facility votes. Let's see. Basically, it's the meeting minutes, the votes, whatever. But that comes out at 5:30. But at the same time, trying to see what else they're going to have. Their unemployment rate coming out. That's going to add to it a little bit. Okay, so we'll be able to use that to our advantage to give us a little bit more oomph. And that looks like that's about what we got. So, okay, so let's see what we got on average moves here. We're looking at the pound dollar, pound yen. Pound dollar definitely has the more consistent movement. Over 91% of the time it moves 50 pips. Okay, and within 2 hours, and the average move is 80. The pound yen also has an average move of a little bit over 80 pips, but it only moves 50 pips 62% of the time. All right, so if I'm choosing a trade for this decision right here, I'm looking at the pound dollar. I'm looking at 80 pip move potential average with a 91% breaking 50 pips. So pound dollar is definitely my straddle trade right there going in, and that is going to come out at 5:30. So that's going to go ahead and that's going to push my strike selection. I'm going to have to be looking at either the 6 or the 7. I'm probably definitely going to choose the 7 o'clock for doing my straddle on that trade. If it is too expensive for the 7, okay, remember, I have an expectation of about 80 pips, okay? So if I go in and I look at this thing at midnight, and it's costing me 60 or 70 pips to put the trade on, then I may be a little more inclined to do an iron condor. But my straddle or iron condor selection, depending upon how wide it is, how expensive it is definitely going to be the pound dollar, and it has the most consistent, largest move of 80 pips on the pound meeting minutes, votes coming out. And I think that's at 5:30. So you can enter that as early as really anywhere between around 11 o'clock tomorrow morning, or tonight, like 11 p.m. when the 7 a.m.s open up. So that you don't have to get up super early for the trade. If you are doing a straddle, put on your take profits. Okay, if you're doing an iron condor, you're going to have to put on some stops, or you're going to have to go in and you're going to have to get up early to get the narrower one because it'll be too wide otherwise. All right, stay there. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. All right, so we're going through, we're checking out the news and catching you up on everything. And we said meeting minutes. We're looking at a pretty big vote on that. And even though there's no big surprise on it, we still want to get a pretty good movement out of it. But again, one of my favorite things lately, a lot of these pound trades has been just doing the opposite, doing iron condors on them. I've been loving them. So go back, check out some of my archives. You'll see where I've walked through them step by step for you. Okay? And I'd be glad to, help out, answer any questions that you have at all. Just call in, and I'll be glad to help you. Well, let's check out. We also got the FOMC interest rate coming out tomorrow. Okay, so we'll look at that one. And we'll dive into a couple of the other trades that are coming out. But for the FOMC interest rate, and let's see what we might get for the biggest consistent moves across the board on those. Usually looking at Euro, but I'm going to fine-tune it down to a few things and see what we come up with here. Let's see. Okay, so I'm going to go into a lot more details on this report for you tomorrow, but we are looking at euro-dollar about 95% of the time breaking 50 pips. Average move is 70. Pound-dollar 83% of the time breaking 50 pips. Average move 70. All right. Those are the two most consistent ones that do move that far. Dollar-franc about 65 pip. U.S. yen, Aussie dollar, close to 60 pips, but a lot lower averages. So your big moves, your big averages are euro dollar, pound dollar, and there's a good chance it's going to be way, way too expensive. Okay? So, again, I'm going to go into just the detail on this report for you tomorrow. We're going to talk about it, and but there's a good chance that it's going to be really, really expensive, and we may just look at iron condor in the entire thing. So we'll see how much they're going to pump into this. And if they don't pump a lot into it, then we could have some great straddles. If they do pump a lot of premium into it, then that's where we're going to go in, and we're going to do the opposite of the straddles. So we'll buy the lower and sell the upper versus sell the lower and buy the upper. And the risk sometimes is actually lower than a straddle, which surprises a lot of people. They think they're having more risk, and it depends upon exactly how you're putting it together. If you're doing it right, often the risk can even be lower than a straddle trade with a higher probability. And, just looking down at the history on it, I'm going to pull up, let me check out a couple things here. And we'll try to do a little bit of review on this. But on the euro dollar and on the pound dollar, the pound last time moved massive. Moved about 126 pips, but it was end of the day, so it doesn't do you a whole lot of good. It was a big move like overnight, like it finally made a big move the following morning. But that's not really a consistent thing, so we don't want to count on it. Okay? We're looking at moves, like we had about 35, 40 pips in the last release. Nothing major on both of them, euro dollar and pound dollar. One before that, we got some massive, massive moves. The pound dollar actually shot down 55 pips and shot up 83 pips. The euro dollar pretty much it shot up about 15 pips, but then it shot down over the next hour there about 95. So we got a big, massive move. We got about 60 pips on the pound, about 65, 70 on the euro dollar. The one after that, if we go to look at 3 o'clock, we got about 153 pips on the pound, 127 on the euro. So there's been some big moves lately on this report. And I'm just going through and looking at it, trying to see with this report coming out. And it's not even been when there's always a news conference. A lot of times that news conference will have a big impact. Whether or not it's a massive thing. But they're going to have FOMC statement. They're going to have the FOMC press conference. And so what I'm doing is I'm going back now, and I'm just pulling up right here. And I'll look at a couple things. Like what I'll do is I'll go in and I'll look at the previous reports and go, on these reports, what was happening at the same time? Like, did we get the press conference? So because sometimes, this one had the press conference. Did this one have the press conference? Yes. What about this one? Because not all of them will have a press conference on some of the FOMC statements. And so if they don't, you want to look at that, see what that difference is on different ones. And that's just where it's just the rate itself. So versus the full, press conference. And the economic projections will always come in the press conference. But if you just pull up the statement, that's when you'll see more what I'm talking about. But anyways, we'll go into a little more detail when we get back. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So coming back here to the Diagnostic Trading Hour. And so we're going to the Fed funds rate. And I was just talking about how the FOMC statement, when it's combined with the press conference, usually has a larger impact. And we do have one with a press conference. Obviously, also Yellen coming out with this one. So the one that's coming up right here. But just checking out the historical ones, the current ones. But we got the FOMC statement, the economic projections, obviously the rate, and the press conference all coming out at the same time. And going back and looking at some of the historical ones that came out, looking at like January's right here. This is how we had the funds rate without the press conference. So, and it was one of the smaller movers. Okay. Then we go back to December 18th, and we had a pretty big move. A little bit crazy, choppy move, but if we go back to December, notice we did have the press conference. We go back to the one before that. I believe we did as well on this one. Without a press conference, I think we still had a pretty big move. About 50 to 60 pips, not the biggest one, but so that report right there on October 30th. So it was a little bit smaller of a move. Just notice that consistently we're getting a lot bigger moves when we do have press conferences. September, we do have a press conference, I believe. If we didn't, that would be pretty shocking. That says July, would have been here. We go in and grab the September one. There we go. September. Yeah, so we had the press conference on that. Yeah, because that was whenever everybody got head faked and they thought they were going to do QE and they didn't do QE, roll back, and all this other stuff that happened. And then in July, we did not have a press conference about a 60-70 pip move. So just trying to stress the point here over and over again, we're seeing that press conferences usually do make the move a lot bigger when that happens. But you'll need to be aware of when the press conference actually happens as well. Okay, FOMC statement, Fed funds rate, all that. But look at the press conference happens like at 2:30, so about 30 minutes after 2 o'clock. That gets going, and you always want to look at, of course, current date and make sure that's up to date. But it looks like it is. Be able to watch that on C-SPAN, everything else. But that will rock the markets, and it usually will give it a little bit more of an umph right there. A lot of times, if there's any kind of shock, anything in there, then we'll get a surprise on that. We'll find that out. But with everything that's going on, the Fed's been continuing the measured additional, $10 billion of tapering for every meeting. It would not be a surprise to see continued further tapering today. If there is not additional tapering, then we should see the dollar drop, or the sell-off of the dollar. So should we go long the pound dollar, euro dollar immediately? The dollar itself will remain under pressure. And then the reason for that is if they're tapering, that means that's strength to the dollar. If they're not tapering, that's weakness to the dollar. Okay? And if they add on another $10 billion, okay, the market the dollar could start flying up. If they add on even more, that'd be a big positive surprise. Okay? So it would not be a surprise if they say, yeah, we're going to continue the $10 billion of tapering to see some dollar strength with that. But if they go in and say, we're going to do $20 billion this time, that would be a massive bump. Okay? No one expects this to happen, but if it did happen, then expect the dollar to get much stronger. Like buy dollar, yen, sell euro dollar type thing. Okay? If they decide not to taper, which most people expect that they will do another $10 billion to taper, if they decide not to, then again, the dollar itself should get weaker. And that'd be like a buy pound dollar, buy euro dollar, sell dollar yen. Okay? So just a little bit of analysis there for you. And, there's a lot of little pieces we could pick out of the last statement that came out. And the prior changes on the last FOMC statement were things like where they went in and they said, economic activity is expanding at a moderate pace. Whereas before they talked about being, disappointing report. And then they revised it to, although the extent of restraint is diminishing, they revised it to from may be diminishing. And they changed, let's see, a couple other things in the last report. Economic activity will expand at a moderate pace to revise from economic growth will pick up from its recent pace. Okay, so they went from activity to growth and pick up. And it's really weird, but this is what they do. They go through and they look at every little bitty word, and they're very careful about what words they choose, okay? And these little words, these little changes from the last one to the current one is where everything gets changed, and where all these big market algos and everything else fire off. The committee decided to make a further measured reduction in the pace of its asset purchase versus to moderately reduce the pace of its asset purchases. And let's see here. Obviously, they tapered another $10 billion. And then Rosengren, his dissent against tapering was removed because he is out of the voting membership now. He rotated out. So we no longer see his voting against tapering being removed, vote being in there anymore. So, anyways, just a lot of little details, not stuff that you need to be the master of, honestly. But just, these are some of the things that people are looking at when they're trading this in detail. But at the end of the day, I'm looking at how far does the thing move, and can I straddle it, or can I do an iron condor on it? That's all that really matters at the end of the day. So how can I make money with it, not how much do I understand every little word that's inside the meeting minutes. But you got the UK MPC meeting minutes, you got the FOMC meeting minutes coming out, both of those tomorrow. We're also going to have U.S. existing home sales coming out on Thursday. And we'll have Canada Core CBI and Canada Core retail sales. On the existing home sales, usually not a massive mover. Okay? Those are, you'll see that highly ranked on a lot of things. Just because the fun little currency chart up here says that existing home sales as a high impact report doesn't mean it's really going to have a high impact on the market. They'll label everything under the sun with red on it. That doesn't mean it's going to make the market move. Okay? So existing home sales, just looking at it to give you some, basic stats on it for you. I'm not seeing much of anything break 50 pips, okay, consistently. Let's see here. Trying to go in to see if we see anything that's even useful on that report. It just amazes me how so many of these things are ranked high, but they have no consistent impact. Pound dollar does have an average range of 60 pips, but only 30% of the time does it actually break 50, which means that most of the time it's very small in its movement. The one way that could help you is that could be a great iron condor, because if there's that much volatility expected, but that little really happens, that would be a great possibility on the trade. With the time that it comes out, though, at 10 o'clock, you'd probably need about an 11 o'clock iron condor on it to build in that implied volatility. So that would be the trade at 11 a.m. I would probably actually look at an iron condor for 2 hour, because I want that narrower one, on preferably Eurodollar, pound dollar if required. The reason I say preferably Eurodollar is they're narrower. Okay? The actual spreads themselves are more narrow, therefore you can go in and your risk is lower on the trade. And so a lot of times I end up doing pound just because there's so much implied volatility built in. But when you look at the risk-reward model on a Eurodollar versus a pound dollar iron condor, a lot of times you'll come out a little bit better on the Eurodollar as long as you can get the the IV in there, because it will, since the range is narrower, that means a lot of times you don't even have to use a stop loss on the trades, because the range is so narrow it doesn't really matter. Let's see here. The next thing, let's see what's going on. Let's look at this, and I'll show you what I'm talking about on this Eurodollar, pound dollar thing, just in case this is new to you, in case you haven't looked at it. I want to bring up the scanner and show you exactly what I mean. Okay? So right here, if we go over here to the scanner and click on Eurodollar, click on pound dollar, then you'll notice how the pound dollar, see how the ones that are current hour, there's 150 ticks wide, whereas the Eurodollar ones are 100 ticks wide. And due to that being narrower, let's say if you're getting 50 bucks on each side on both of them, well, 50 would be a lot. That'd be basically a ARB if you get 50 bucks on both sides on a Eurodollar one. But you can't lose as much on this one because it's narrower if you're doing the iron condor on it. So that's why I like them. So if I went in, let's say I was selling this one and I was going in and buying this one over here, that'd be a little bit wider than I'd want. Let's get the one that's lined up. Let's see, 38.50. There we go. See, it's the exact same one. We need 39.54A. Floor over here, maybe a ceiling, 38.50, 39.50 on the sell. And bring it up one strike. See if I can find one that does line up. Might just need to reset my filters. Alright, and then we'll scroll down. That might be a middle strike too. That might be why it's a little difficult at the moment to find it. If there is a middle strike, then you can't get one that matches up. Yeah, it's like we're at a middle strike right now. But basically what I'm saying is, if it's only 100 pips wide, and let's say I'm bringing in 20 bucks on the long side, and I'm bringing in 20 bucks on the short side, that's 40 bucks of profit, 60 bucks of risk. But what if it was, because $40 of profit on 100 pip wide would be $60 of maximum possible risk. If it's 150 pip wide, I was bringing $40 probably be 110 pip maximum risk. So that's why, if you can find them on the Eurodollar, it can be even better. And some of these, sometimes we'll even have narrower ones. So you can look at, what the width is on the different, short-term strikes. We're like, okay, 100 on Aussie, 150 on pound, 100 on USD CAD, 100 on dollar franc, 100 on US yen. So you find out pretty quick, okay, pound has some of the wider spreads. And you can also look at, pound yen, euro yen. Check those out. We can uncheck the others, so you don't have to look at everything. There you go. So pound yen, look at that, you're getting 100 pips wide. So maybe you can find the exact same thing on the pound yen, potentially, but with a more narrow spread. And 100 pips wide also on the euro yen. And again, this is for doing the iron condors. We're doing the inverted trade. Instead of doing a straddle, you're doing a iron condor. You're buying the lower, selling the upper. So neutral trade, if it stays in the range, can work out really, really well for you. And it's nice. The market doesn't have to move big. But so existing home sales, that's probably what I'd be looking at. Like I said, based on the stats on the existing home sales reports, basically what I'm seeing is that we're looking at, Aussie's like 35 pips high to low. Euro dollar, 51 pips average. Pound dollar, 60. But only hits at 30% of the time. Dollar CAD, 47 pips average high to low. Dollar franc, 53 pips average high to low. US yen, 38 pips average high to low, but literally has not hit 50 pips in the last 2 years at all on the U.S. existing home sales release. So it could even be even better. It's just a matter of finding the one with the most premium in it to work out the best for you. And that's, again, for an 11 o'clock. We're talking about 11 to 12, but that's just 11 o'clock expiration. You could check out 12. The problem is the report comes out at 10 o'clock. So you'd be putting the thing on right as the report comes out. That'd be pretty hard to pull that off. The other reports that we have coming out that are pretty big on the week is we got the Canada Core CPI and the Canada Core Retail Sales coming out over on Friday. So right over here, Canada Core CPI and Core Retail Sales. And with those trades and what's coming up on them, looks like dollar CAD, pretty low average movement. 57 pips is the average range, but only 25% of the time does it break it. So that could be a trading opportunity again right there for like getting in at 8 for a 10 o'clock Iron Condor. But let's make sure we do combine it. We have two Canada things coming out. We also have the core retail sales coming out. And core retail sales, 41% of the time it breaks 50 pips, 63 pips average range. So I probably want to ideally get on an Iron Condor for $50, about $50 in premium is what I'd be shooting for on this trade. I'd definitely not be going for a straddle. It does not consistently have a big enough breakout for a straddle. But if I could pull off an inverted straddle for about $50, definitely looks like it could be a solid trade. And if I go down and look at some of the historical trades that I got on here on my CAD retail sales and sort of seeing what has worked out lately. Then it was like a last report. Yeah, we got about 37 pips was the big move, but then it pulled back to about 20. Beyond that, let's see here. Put everything over to the same setting. It's about 30 pips pulled back. But the first we got was 38, but it pulled way back to like 4 by 11 a.m. So I'd be, you may be shooting for 11 o'clock on this one because it really does seem to do a great pullback by 11 o'clock. So 11 o'clock would be my Iron Condor, entering it at 8 a.m. on the CAD. And I'm seeing it even, sometimes it does it, like the biggest explosion I've seen right now is 60 pips, but it pulled back to 5 by 11 o'clock, 5 pips off. This one oscillated all around for hours. Right at 11 o'clock, it started to pull on back down to about 20 pips off. Looking at another one, we're 15 pips off of where the release came out. Looking at another one, 23 pips at 11, but it was like 5 at 10 pips at 10 a.m. So lots of Iron Condors again. Looks like it's going to be a good Iron Condor week. Oh, we have 1 or 2 of these. So far I can see 2. One that would have basically broke even if you could have got about 40 to 50 pips. Another one that would have lost by 20 pips out of the last year. All the others would have been profitable. So doing an Iron Condor on that dollar CAD report. All right, stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And we're just going through all the news reports for the weekend. I think we got them all wrapped up here. And but we'll go through some more detail for you a little bit later in the week as we put all the pieces together. But like I said, we got the MPC meeting minutes coming up at 5:30 for the British pound. Okay, so we're looking at the 7 a.m. expiration. We're going to see how expensive or cheap that is. Can we pull off a strato or an iron condor based on about an 80 pip expected move, high to low? Of course, we do expect a retracement. The U.S. FOMC interest rate announcement is going to be coming out at 2 o'clock tomorrow. So, again, we'll also be looking at that. We'll look at that in detail tomorrow right here on the show. And they'll be released at 2 o'clock Eastern Time. On Thursday, we're going to have the U.S. existing home sales at 10 a.m. We'll be checking at 11 o'clock and maybe even later. But probably at 11 o'clock, existing home sales report for Iron Condor on that one. And we'll go into that one in a little bit more detail for you tomorrow as well. And definitely like the 11 a.m. Iron Condor on the Canadian Core CPI and Canadian Core Retail Sales report. As long as we can get enough premium for it, that should be an excellent trade setup based on just historical moves being about 20 to 40 pips on average. And so if then again, that's the big move. That's not the move and then it comes back. It's high to low. So it may move 40, 50 pips, but then it comes back and it's only 5 pips off where it started from. That's when you get that max profit on those those Iron Condor trades. So that really is the summary of the news that you can use for this coming week. and hopefully that'll get you all set up. Don't forget, Nadex has now added the pound dollar, the Aussie dollar, and the Nikkei 225 with intraday nighttime contracts on the binaries that you can go in and you can take advantage of. And so pretty cool, nice addition. Hopefully they'll keep adding more of those as the volume keeps picking up on them. And I know they grew 100% year over year just in their contract volume. So over the past 12 months. So hopefully that trend will continue, and I don't see any reason why it won't. And with doing so, they'll keep adding in more and more and more contracts, more and more expirations, more and more instruments. Again, if you have any questions, feel free to definitely give me a call here at the Diagnostic Trading Hour. I'll be happy to help you out. Also, we have the Bull Bear Binary Hour Friday morning at 10 a.m. Eastern Time that you can tune into. And let's do a quick market wrap, see where everything is sitting at right now as we go into the top of the hour. We got the S&P is currently up 13 points. We have the Russell up 17. Nasdaq's up 45 points on the day. We got the Dow up 114. We have copper is currently pretty flat on the day. We got gold is still down 12 points, about 1%. Silver down about 2% on the day. Natural gas moving on down about 1.5% still. We got oil currently looking over at it. It is currently up a little over $1, 1% on the day. We got corn still up 1.5%. Soybeans up 1.6%, 23 points. Nice big move in soybeans today. Euro dollar is currently pretty flat. Comparatively, up only 2 pips on the day, 4 pips on the day, I guess right now. Not much of a move at all. Aussie dollar 37 pips. Pound dollar is down 55. Dollar franc is currently up 6 with the dollar CAD up. Let's see. Dollar CAD right now is up 81. So big move there on the dollar CAD. There's some I saw a little bit of chatter going on about potentially messing with the interest rate. So lowering the interest rate, which on the Canadian dollar and or the Canadian dollar itself. Therefore, that would weaken the Canadian dollar. Therefore, make the dollar CAD go up in value. So, because that'd make the CAD weaker as they're paying less interest out for those who hold the currency. So that's what's leading to that rise right now in the dollar CAD. We got the dollar yen down 29 pips, and the euro pound is up 29. All right, y'all have a great day, safe day, and I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.